software is crashing. So I think we're good. All right. So welcome to State of the Market for July 13. I'm Raghee Horner, and I'm the resident futures and forex trader over here at Simpler. So welcome if this is your very first State of the Market. What I'm going to talk about here, and some of you might have joined the first one that I did, I'm going to talk about some of the charts and setups and the outlook that I have for really today forward, but a couple things that I think are a little bit more acute, a little bit more intense at the moment, and then what the bigger picture is maybe for the next quarter or even to the end of the year. So I think we're good. For those of you out there who do have any questions, feel free to type them in. I've got my eye on the chat. I kind of am daring to try my camera, my screen share again, but I don't want us to crash. So we'll kind of move forward, all right? And if you do have any questions, like I said, feel free to type them in and ask. All right, so what have we got going on? Here we go into the latter half of July, and we're into the summer trading season. Now, this is not like any other summer trading season. What we're talking about is a market that's once again inflated into a pretty significant asset bubble. I think I spoke with you all about a month ago. And if I think about what's happened in that month, a big part of what we've been doing, and so you might want to jot this down. Again, my apologies for not having the screen, but let's jot down a few things that are very important. One is right now on the longer term time frame, and also as a day trader, I am long only. All right, I am long only. So that means that if I'm looking at an overnight trade, I'm waiting for two kinds of entries. We'll talk about that, but they're going to be buys, either calls, long calls, call verticals, or just straight up long positions. Okay, that's number one. And then we started that on June 10. Here we are 1 month later, and I have no intention of taking my foot off the gas pedal. So that's the what. That's what I'm doing. Let's talk about why. The why is we are in an asset bubble. I don't think that's news to anybody here. But for those of you that maybe weren't around or trading actively during the 97, 98, 99, 2000, during that tech bubble, a lot of you will notice this is very reminiscent of that. Now, unlike low rates and just a tulip mania type frenzy for tech stocks that powered a lot of that, cheap money is oftentimes the precursor to all of this. This particular 2020 tech bubble really is continuingly, purposefully, consciously being inflated by not just the cheap money that was the precursor to this, but also by the Federal Reserve and the Treasury. A lot of you know this. You look at the balance sheet for the Federal Reserve, which V-bottomed in its own right last year, mid-year, about August, I believe. So as long as the Federal Reserve is pumping money or just expanding the balance sheet, and they've empowered the Treasury via the special purchase vehicle to buy certain ETFs at BlackRock's behest. Yes, it's hardly, I can't even believe I'm saying this. It's like I'm in the Matrix. But, and by the way, I believe that was our topic to take the red or blue pill the last time we spoke, to stay in the Matrix or not to stay in the Matrix. And again, keep taking the blue pill because that's where we are. We're in the Matrix, all right? We're going to stay plugged in. So as long as that's the case, you're going to notice that we're going to continue to see the kind of movement higher that we've seen now for quite a few months. Don't look for fundamentals to support this. Certainly don't look for macroeconomic principles like inflation growth to support this. This is purely monetary policy and money supply, which are two macroeconomic principles that are just wide open throttle by not just the U.S. central bank, but by central banks all over the world. Okay, so that's sort of the why of that June 10 forward long bias. Let's get into a little bit more of the what and where we want to focus. So as far as focusing on where to buy, certainly we know some of the names that have been very, very popular. We think about the way in which Apple's been moving higher. We think about the way Microsoft, Amazon, Facebook, Google, those are the big five. Let's make it 6 now and add in Tesla. If you take a look at the weighting of the NASDAQ, you take a look at the holdings of, say, the QQQ ETF, you'll notice that the first 7 names are in some sort of order of Microsoft, Apple, Amazon, Facebook, Google, Goog, so Goog L and Goog, and then Tesla. So Tesla now is not just a name that we talk about, sort of this fascination, the way that it's taken off, but its impact is being felt in the NASDAQ. So if we have Tesla moving higher, and we have those other 6 names also moving higher, we'll call that the big 6 for the NASDAQ and then the big 5 for everything else. Think about the weighting of the S&P. The S&P 500 is going to go pretty much wherever the NASDAQ lets it because of the weighting of those stocks, right? I think a lot of you know this. So then the question then becomes, where do I want to focus my long positions in this asset bubble? I mentioned that there's 2 ways we can do this. Let's go back to that. There's 2 ways we can do this, all right? So first of all, we talked about this being an asset bubble, long only, what stocks are leading the charge, and also the fact that there's 2 ways to get in. How are the 2 ways we can do this? My preference is for pullbacks, whether I'm day trading or whether I'm end of day trading, meaning for me, that's a 1-minute chart or a daily chart. So regardless of the way that I'm trading, I like to see a trend correct. Call it retracements, call it a pullback, what have you. That's what I prefer to see, all right? So if that's the case, let me grab a swig of water here. Okay, so if that's the case, any kind of retracement to what I call the 34 EMA wave. Now you can put this on your chart, really simple. Put 3 moving averages, exponential moving averages on your chart, the 34 EMA on the high, the 34 EMA on the close, and the 34 EMA on the low. Those 3 moving averages make up something I call the 34 EMA wave. Pretty simple, right? When we pull back to that level, I'm typically going to be a buyer if the trend has been continuing higher. Going back to how we can do this. We can do this as day traders. I've been day trading every day. I'm going to tell you right now, gang, day trading, and I was hoping to show you my screen because I'm going to break down my account and the kind of trading that I've been doing. If you like day trading, all right, humor me and think about your day as 2 separate days. There's an AM session and there's sort of an afternoon or PM session, right? 9:30 to noon and then noon to 4. Everything I'm about to tell you that I'm doing and the account growth that I've experienced has been the 9:30 to noon variety predominantly. That means that I wait for the cash open, the Wall Street bell to ring, and then by the lunchtime doldrums, when the European markets are closing as well, I'm pretty much wrapping up my day. I might put in a trailing stop or something like that, but I'm pretty much looking to the long side for about 2.5 hours. Gang, I never started trading, and I doubt you did either, to confuse myself for a hedge fund. I wanted to trade about 2 or 3 hours a day. I think there's only so many hours that we can be very intensely focused on anything. I wanted to trade about 2 or 3 hours a day, and then maybe go research, write, do the things that I want to do. They're going to still be market focused, but I'm not going to be trading all day. So my life is designed around that. With that being said, and I'm hoping, and if you haven't already, we do free videos. I'm sure a lot of you know this. Hey there, Rose. Is this cool? I'm glad. I was hoping to show you guys some charts, but I'm glad we had this time to talk to each other. And again, gang, keep your, any questions you might have. I can see them on the platform, and I'll go back and answer them if they get posted after the live play is done. I'll check out the replay questions. But anyway, and thanks for, hey, Evan, thanks, Rose. All right. So, and I'll recap everything. So what I would like you guys to do is humor me and think about what you could accomplish in 2.5 hours. Attention and discipline are finite things. We know this, if you read different books about the way the mind works, and I don't believe most of us can keep intense focus and discipline throughout the entire trading day. I've been trading for 32 years and I struggle to do that. So I'm going to tell you what I did is say, look, I can't do that. I can try, but it's not comfortable. When is my best power band? For most people, your best power band is typically going to be before noon. Your brain is just going to be ready to do more at a higher level in the morning. And I'm not accounting for everybody's circadian rhythms, but I know mine, and I think that's pretty normal across most, not all, Homo sapiens, okay? 9:30 to 12, look for the way in which the market's going to pick a direction. All right, we're going to stick with the long only and day trade. Day trade that part of the day. There's two ways I'm day trading. I'm looking for range lows to be a buyer at, or I'm looking at breakouts. So I mentioned there's two ways you can get into the market. I'm going to look at oversold lows, usually the kind of lows that form between 9:30 and 10 or 9:30 and 10:30 Eastern, or I'm going to look for opportunities to play breakouts with volume confirmation, okay? Now, when I'm playing the kind of exhaustion or lows that I'd like to buy, I'm playing volatility confirmation. Am I near sort of the repeating patterns of volatility and down near those support levels, right? That's going to be my, call it oversold buy opportunity, or I'm using volume to play breakout. So you can say exhaustion using volatility or momentum using volume, right? Those are two different gears we shift into. We call that pole position. You guys remember the video game from way back when? Pole position, high gear, low gear. You can't always be in both. And each one has its use, right? Throughout the course, high gear, low gear. All right, so those are the two ways that we can do it. Now, in that 2.5 hours, what I've been doing is, and hopefully we'll have some time where I can show you a little bit more granular detail. But what I've been doing is since last week, I'm a week in, by focusing only on the long side and not being, as I endearingly call it, twitchy, long, short, long, short, long, short. Digging my heels in, waiting for one of those two opportunities on a 1-minute chart. Right now, I've tripled an account. Not because necessarily I'm picking these magical levels. You don't have to, all right? But because I have directional bias within the context of an asset bubble. So how far we're going, I'm grateful to the market, right? I'm not going to confuse how far we're going for something I'm doing that's magical. Unicorn, I am not. But what I am doing right, and what most traders who are doing well in this environment are doing right, is they're focused on the long side of the market. Heads up, right? Where are we going next? How long will this last? As long as the Federal Reserve darn near wants it to. All right? If they darn well want it to be heading higher and an asset bubble is going to be inflated by the inflation of the balance that the Federal Reserve is comfortable, I can't even imagine they're comfortable, but that's a different conversation. As long as they're comfortable increasing that balance, we're going to continue to see higher highs, gang. A couple of things we're also noticing, a couple rhythms, all right? This is, again, state of the market, yes, but I want to get tactical with you. I mean, last time I spoke with you, we pretty much established, and you can watch the replays of all our amazing traders here at Simpler. You can catch the past replay when I was with you all. We were talking about the state of the market, and I specifically talked about taking the blue pill, staying long. So I'm not going to reiterate that. If you want to know, what that's all about, go check out that previous state of the market. I'm talking very tactically with you guys right now. A couple things. I take breaks, but don't check more than, okay. Marshall, I love it because, your brain is going to do the first and last thing within a segment of time the best, right? I remember one of my first kind of personal development courses I bought was something called where there's a will, there's an A. I was in middle school. Grades then mattered to me a lot. So I bought this course called Where There's a Will, There's an A. And one of the best things that taught me is when you're listening to something, when you're doing something, you kind of do the very first part of it with a lot of intensity and focus and kind of the last part of it. And in the middle, it's just all mush. I think there's some truth to that in the markets, the opening and the closing, and then our attention spans as well. So yeah, I'm with you there on that. I'm with you there on that, Marshall. Sharuz, I hope I pronounced that correctly. Sharuz, great. Thank you very much. Could I please post a teaser course on YouTube picking the, you know what? So for those of you that are sort of new to what we do, if you head on over to simplertrading.com, you can see our entire roster of amazing traders. And also you can sign up for a free video. Okay. And in that free video, you can learn from our resident Fibonacci expert, our resident options experts, and our resident futures experts. And I do those free videos nightly. And a lot of what I've been talking about, you guys can go check out in the archives of those free videos. And so a lot of great tactical content about what we're talking about right now. So where did we leave off? 1 minute charts, oversold, volatility, momentum, and volume. Okay, stop by around 11:30 noon. Now, why is that? It's not arbitrary, and it's not because my stomach is grumbling. It's because two things are happening. Volatility is contracting. This is a very rhythmic part of a historical volatility study. Volatility is contracting. Volume is also decreasing. And you have the European markets closing, and you have the UK markets preparing to close. So those things are both happening simultaneously. Hang on one sec, gang. All right, the trading cat wanted to enter the office. There he is. Okay. Gotta support my trading partner, my trading cat. All right. So looking at the way in which the day winds down, it's not arbitrary. It's not arbitrary at all. So, and by the way, I'm talking East Coast time. By 11:30 noon, think about what's happening to the volatility, think of what's happening to the volume, and also who's leaving the market. Europe's on their way out. UK's preparing to go to the pub. So that part of participation is winding down. Now, this is something that I picked up from the forex markets, right? And this is sort of understanding the global 24-hour nature of the market. So my futures traders out there, one of the things you're going to find is there are oftentimes going to be interesting opportunities into the Asian session after about 8:30 p.m. Because now you've got the Asian session, what we call the pajama traders, the after hours Asian session traders, oftentimes on low volume, driving the market higher. We've seen this many, many times, even when the markets close weak during the cash close. So keep an eye on that probability, that rhythm as well. Now I talked about AM, PM. This morning, the markets were rallying. You can watch television. I've got a TV just here to the right of me. I'm actually in my office right now, and it'd be cool to give you a little tour, but yeah, I'm in my office right now, and to the left, I've got a television, and all I saw on the very bottom of that bug all day was there was an optimism about vaccines. That's why we were up. And then at the second half of the day, it was a completely different narrative. The market did a 180 on the psychology. And then we're thinking, okay, what's the market worrying about now? As we sold off, California reclosing. 2 different days we just traded. So I think it's really important if you're going to trade, day trade, or if you're going to get the timing on your pullback buys, think about which half of the day is better suited to that. So the first half of the day, I was long S&P, I was long NASDAQ, and I took advantage of the day trade. And like I said, I wound things down around 11:30, 12 o'clock. That's the first half of my day. The second half of my day with the traders in my futures room, we said, hey, look, I'm reading some notes here that we did together. I was looking at pullbacks in certain ETFs that are going to track with the futures contracts. Now, some of you might be stock traders. Some of you might be futures traders. I want you guys to be fluent and fluid in all of them. That's what I love about what we do here at Simpler. We do forex, we do futures, we do options, we do ETFs, we do stocks, right? A handful of our members are active in crypto. A market is a market, and as long as there's volume, we have opportunity, all right? When you start studying multiple markets at the same time, especially in this asset bubble, you'll see a lot of them are moving with each other. So your strongest market right now is still tech. You can think in a broad way, NASDAQ or QQQ, but that would actually be sort of limiting because, especially right now, the NASDAQ's just been on a tear. It's not been pulling back very often. But XLC, XLY, the communications ETF, discretionary ETF, SMH, the semiconductor ETF. We can look at XLK, which is another technology ETF, sans Amazon, with mostly an emphasis on Microsoft and Apple. So what you can do is sort of take a piece of the NASDAQ that's going to coattail the broader average and look for opportunities there. So you can get very granular. The broader index futures or ETF, then sectors that are heavily weighted within those, then stocks that are heavily weighted within both. And they're all connected. So I'll give you a great example. Last week, on a pullback, a slight pullback, we got long calls in the XLC and XLY. One of the things I'm looking to do into today and into tomorrow is get long the XLK, maybe get long the XLC again. Another thing we're looking to do is buy Salesforce, Microsoft. Again, I'm looking at some of these notes. Oh, and also the CLOU ETF, which has names like Salesforce, Twilio, Shopify, WDay, some of these very popular stocks that are going to track with the NASDAQ. So on one hand, I welcome a larger pullback, which you'll see there's sort of this increasing expectation of. Every time we sell off, suddenly there's an increasing expectation for a bigger pullback. Certainly the market ended sort of on bad news, but remember, we're going to see this every day. We're going to see oftentimes one narrative, could be bullish or bearish in the morning, and sometimes a second narrative in the latter part of the day. So as a day trader, divide those two, treat it as 2 days, divide it up. As an end of day or daily time frame trader or a longer term time frame, think about which momentum is most conducive to your buying pullbacks. So if the early part of the day is weak, I'll focus on that for potential daily time frame long call positions. If it's not, I'll look for the second half of the day, right? So study the momentum, and remember, the market could completely change its mind after lunch. It's not unusual. These are the probabilities we've seen happen again and again. So let's see. Let me keep an eye on the questions here. All right. Is everyone with me so far? It's kind of making sense tactically. Again, go check out the previous state of the market that I did with you all, I think maybe 4 weeks ago, where I said, hey, take the blue pill. We want to stay long. We're in an asset bubble. Here's the reasons why. Nothing's changed since then, gang. Now we're talking about, can I be a day trader in this environment? Absolutely. And can I focus on end of day pullbacks? Now, I know the word pullback almost seems hilarious. Right? We don't see these pullbacks very often. And they're going to be a little shallower. Instead of a pullback to the 34 EMA on the close, I might get a 21 exponential. I might get a 13 exponential. I might get an 8. Nonetheless, that's going to be actionable for us because in asset bubbles, it's not just buy the dip. It's full on fear of missing out. These markets are rocketing higher. Those of you that remember the tech bubble are going to remember what this was like. And so it's not about macroeconomics. It's not about fundamentals. It's really about sort of the technicals behind a lot of folks playing catch up to this abrupt recovery, and also a willingness to buy higher highs. Probably best exemplified by something like Tesla, the NASDAQ, even Apple to a certain degree. Hey there, Harley. I appreciate that, gang. Y'all are too kind. How does a person become a futures educator? James, I think the first thing is just to be a really, really good futures trader. And then teaching, I will say, teaching is a terrific way to become a better trader. Any one of our traders here at Simpler will tell you that, yeah, sure, we could do this at home. I don't need the camera and the microphone and all the other accoutrements I have to be sort of broadcasting my trades, or as I like to say, trading in a fishbowl. When you explain your trades to someone else, it's going to force you to get clearer and clearer on your ideas. When you get clearer and clearer on your ideas, I think the next thing that happens is you start to automate your tools, which is a process that I've been doing for about 20 years. How do I better not only make quicker decisions, more objective decisions for myself, But how do I shorten and basically make shallower so the learning curve for folks who want to do what I've done without the bumps and bruises? I automate the analysis. So you can take, 3 decades of what I learned by sweat equity, sometimes blood equity. I have bled for trading before. I have smashed, I'm not proud of it, more than a couple keyboards. But how do I automate my tools so that the learning curve of the actual analysis is out the window, and you can just get to the business of trading and trading psychology and trading order execution? So, my early entry into teaching trading was people came to me and asked, how do you do that? What are you doing from home? Realized I was doing this in the late 80s and early 90s. So a lot of people were curious about it. But that's what I always tell folks, brother, sister, mother, father, cousin, best friend, go teach your bestie how to trade. Maybe they're already trading. Create a little community of friends. Now we do things on Zoom or Skype. Start there, start there. Start to codify what you do so you can be as process driven as possible. I mean, that's really it. And I think you enjoy teaching. I'm with you. It's for a very self-serving reason that I enjoy teaching. I mean, straight up. It's because it makes me better at this. If it didn't, I probably wouldn't keep teaching. I wouldn't probably keep being as transparent about my trades as I am. It makes me better. It forces me to automate and to evolve my own tools and strategies, which has been terrific. And along the way, it's helped hundreds, if not thousands, of traders, and that's a great feeling. Yeah, teaching is really it's a calling, isn't it? Am I concerned with overnight gaps when equities swing trade? So AJ, if I'm looking at so as a futures trader predominantly, and I also trade forex, gaps are never a surprise because I'm watching the action overnight. I'm either watching before I go to bed or I see it first thing in the morning. So I'm not like surprise 9:30 gap. No, you see it forming. Typically, if I'm going to get a gap up, well, the long positions that I've already built on pullbacks are going to benefit from that. And if I get a gap down within the first 5 to 15 minutes of the morning, one of my day trading tactics will be if I see some specific gap patterns. So let it serve you either way. Does that make sense? Let it be either great, I'm already in the market, and let it keep following through, or let it be an opportunity to take advantage of the gap psychology that comes along with that. But you remember that when you're a futures trader, equities traders are looking at a 9:30 to 4 reality, but we're looking at really a 24, 5.5 day market, much more similar to forex than it is the stock market anymore. Futures, and understanding what's happening in the broader indices, the futures indices. Let's see. Okay. Hey there, Beach Mama. Love the nickname. How can I find out about my live stream? Oh, so Beach Mama, this is something that we do every Monday at 5 p.m. Eastern. And all the awesome traders at Simpler take turns just sharing charts or outlooks. This is my second. Catch the first one, and I kind of talk about why I'm as bullish as I am. Fast forward to today, July 10, I got a little bit more granular, a little bit more tactical, and a little bit more shorter term. Because if you shorten up the time frames on your trades, you're actually also in many ways reducing risk. Because think about it, kind of going back to the earlier question about gaps, and that's a terrific question. If you're looking at a gap, you're susceptible to that on an overnight position. But if your trading is kind of a 9:30 to noon, or at worst, 9:30 to 4 chunk of time, you're flat. And the very next day, you get to start fresh. And there's definitely an advantage to that. There's definitely a psychological advantage to that. Every day is a new day. If you don't like the clarity of that specific day, you pass. Gang, I trade actively 3 or 4 days a week. That's it. I think a lot of traders think that a day trader means activity. Gang, my broker doesn't love me. I don't have a gazillion round trips. I like to dig my heels in, pick a spot, and then let it go. And like I said, my typical trading day, personally for me, is about 2.5 hours. Not all day, right? I mean, my last book that I wrote was a book called Forex in 5 hours a week, because I wanted to see if I could reduce my trading time in Forex anyways to 1 hour. You take a 24-hour market. I'm like, now I'm going to make my decisions in 1 hour and then push my plan out there, conditional orders, and then see what, and manage it that way. So I'm always looking at ways where, I'm reducing the amount of time, but increasing the intensity of what I'm doing. Because again, I don't think intensity and time necessarily move parallel. I can trade at a high level for a short period of time. So I kind of have designed my trading life around, I think, what most of our biologies dictate in that regard. So, and don't underestimate that. Don't underestimate that. But we take turns doing this session. Next week, there'll be somebody else presenting their ideas and tactics. And every Monday at 5. And then on Fridays at 11:30, I have another feature that I do called Forex Fridays. And we end up talking a little bit about commodities and other topics. So feel free to join me on Fridays. And that would be awesome. I appreciate that. Let's see. Yeah, AJ, no kidding. I do not trade super frequently. I don't see an advantage to that. I don't believe that high probability, low risk trades happen with that kind of frequency. But that's just me, and I'm content doing that, really cherry picking. So let's see, 3150, Eric. Yeah, I guess I should be wrapping up here, shouldn't I, huh? But 3150. So one of the things that, Eric, that I've done going into the close, all my cards on the table, gang, I've chosen to trade in a fishbowl a long time ago, and I'm happy to do it, right? You guys learn from the transparency. Oh, hang on one sec. All right, so I'm back. So a couple things, yeah, and this might help you guys understand like some of the trading that I have going on right now. I'm long XLC and XLY. We were looking at CRM, Salesforce, pullback levels, 185 calls. I'm kind of giving you guys a little bit more granular level of stuff I'm doing. We have a current August gold buy from 1803.5. I'm looking for an 1824 target. I put in some calls on XLK. I assume I'm going to take a little bit of heat on those, but they're like $4.40, $4.35, $4.45 calls. So they're lower price calls. I'm not trading $40 and $400 calls, right? You can actually buy a lot of a $4 call, scale in, scale out, which is really, really helpful. So these are the kind of things that I'm doing. I'm looking for a Microsoft test of 207.70. So to your point around that 31.50 area, 31.50. Yeah, I mean, I think to your point, Eric, if I'm understanding you right, it's a major psychological level. So I love that. And I also know we have some Darbo's resistance in that area. We have some historical price movement range resistance. I was really hoping to show you guys the charts today, but it kept crashing every time I tried to. I do think that that's going to be a line in the sand. I'm with you there, my friend. I think that's going to be a pretty significant line in the sand. The Wholesome Grail, you can reach out to our office. John is one of the many contributors to the options membership. There's a number of us that are there on a regular basis. But yes, John is in that room, you bet. And yeah, I mean, like anybody here, if you haven't tried a trial to the options room or the futures room, please do. I mean, that's why we have the trials, gang, for you guys to come check out, experience what it's like to trade with this, community of supportive, like-minded people and trade a particular asset class together. It's a powerful combination. Let's see. Do I have any long-term positions yet in Bitcoin? Rose, it's probably not going to help you for me to tell you, but I've been a Bitcoin buyer since 2016 before the election. and my cost basis is about $438. So have I done anything since? Not really. I just have such a great cost basis. On pullback buys, it's a tricky thing. I mean, Bitcoin's a whole other conversation, but we have a couple folks who do cover it. But right now, no, I haven't been that focused on Bitcoin. I mean, Bitcoin is a bet against the financial system, isn't it? So I don't mind having Bitcoin. I'm never going to dump those, coins that I've got. They're in cold storage, right? Okay. Very cool. Evan says, I've been happy being a Simple Trading member, did the trial, then joined up quickly thereafter. I love it. I love it. And thank you for being part of the team. Appreciate that. Okay. All right, gang. Any other questions for me before we wrap it up here? State of the market. What's the summary? Long only bias. I've been trading much shorter term time frames between 9:30 and 12. If I get weakness on either the AM or PM session, I shift gears then to a daily time frame and I look for those pullback buys to basically engage this asset bubble to the long side. I'm not going to get caught up in trying to guess at the day we have some sort of, June 10th-esque pullback. Is the market going to pull back? Sure. It's the aftermath of that pullback that's going to be the opportunity, not the pullback itself for me. Okay. And then can you have a lot of productive trading between 9:30 and noon? One of the things I was hoping to show you all is just, yes, number one, yes. Number two, I've taken a fairly small account, about $7,500, and I think we crossed over the $23,000 mark today. Again, short-term trading, about 2.5 hours a day. All right. And I'm talking about 3 futures contracts on average. And in an asset bubble, because we are moving the way we're moving, take advantage of this, of the way that we're moving, but use a process. And that's really what we specialize in at Simpler. Every trader has a process. You learn that process, and then it's rinse and repeat, right? Okay. What's a futures course I recommend? Vinny, I think you can do it simultaneously. One thing I'll tell you, that if you join the futures room or even the options room, we have an education center and a foundations center built into your membership, built into your gold membership. So you immediately have access to a lot of educational assets that you can use to sort of jumpstart. As far as courses go, that's really, it depends. I would reach out to our office and talk to them about what you're looking for, and they can walk you through any one of our courses. But I would say, get the trial, take advantage of what's inside the members dashboard and the kind of educational assets, and also our foundation and training room. We have a lot of things to help get you started before you just jump headlong into the active trading. All right. Okay. So yeah, a lot of folks don't know that. It's not just a chat room, right? We have premium videos. We have alerts that go out to your smartphone. We have also educational training rooms. We have educational content. We have also member webinars. So there's a lot of education that we probably don't emphasize enough. Yeah, it's great ideas, great trading ideas and alerts, but there's a whole educational component that you get access to when you're a member, when you're a gold member. So you can call the office. They'll walk you through it. Okay. But let me wrap up here. I've kind of gone over. So if you do have any questions, feel free to leave them here in the comments. Thank you so much for your time and your interest in trading. It's an exciting time to be a trader, gang. I will say it's a very exciting time. Got to be careful. Got to be tactical and process driven, but it's an exciting time. All right. Take care. Be good to each other, and I'll see you in the next update.